I don't think everybody's in, but that's fine. All right. This was the 16th of of that's that news event right there. Need no more than that. This can literally be your trade for the week if you wanted it to be. All right. So what I'm basically doing or giving you guys is this. Imagine if you knew every single week and beforehand what the lottery numbers would be. And then you'd be able to place it at the exact same time or right before it's going to release. That's basically it. You have the lottery numbers every single week. You don't need to know if it's going up. You don't need to know if it's going down. The only thing you're banking on is volatility, the fact that it must move. So embrace from now the concept of taking a loss. In this case, for example, if you're waiting on this particular news event, we just use what we spoke about last class. Price breaks through an area that you have some sort of reactionary from, goes down, comes back up into it, you sell on that news release. Right? I mean, it doesn't matter where you wanted to take profits. You wanted to take profits at this part. You previously saw that there was a reaction from this level. That's fine. With a proper stop loss, good risk reward ratio, this is a good amount of trade. But what I'm trying to kind of enforce to you guys is that you have to focus on the trades, or rather, I should say, the pairs and the time of day that they're going to move. At this particular time, if you see this perforated line right here down the center, right there, that's when the new day starts. So this would have been 6 p.m., 7 p.m., 8 p.m., where the news release was given. I know at the bottom of the screen it says 1900 because it's a 24-hour clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock. Look what happens to the Australian dollar versus the US dollar as it enters to London session. You notice how it behaves during London session? Why is it not moving like this? Because you're not supposed to be trading it during this time. No one in Europe, no one in I'm not going to say no one, but of course, there are going to be persons who are probably going to be trading, maybe a little bit business activities. Let's just say they have a company in Australia who maybe is doing business with a company in Britain. Maybe you might have a little bit of movement. But look at the conditions here versus the conditions here. This is what you want to be in. You do not want to be in here. And as soon as time progress, and you started seeing these bigger candles, was because we got candles here. But look at London. You don't want to be trading the Australian dollar during this time. There's no need for you to be trading at this time. You're not going to move anywhere. All right, let's focus on the July 19th. Let's take a look. And guys, I could run through every single Forex pair here, and it works on every single thing. So it's not like, oh, it works on that, and that, and that, and that, and that. This is consistency. This is what you need. This is what you're looking for. You want to know that each time you go in front of the markets, you can pick money from the markets with your eyes closed. That is what you're aiming for. All right. So the next day we're going for is July 19th. Let's zoom out a little bit. July 19th. July 19th. And this is a completely different news than the one that we had focused on for the US dollar before. This is Australian dollar news. So when I say that there's every single week, there's opportunities, every single month, there's opportunities. And these same things happen every single month, every single week, over and over and over again. They have to because these are remember now, a country is run by politicians, whatever, people behind the scenes, but they have to be run. They're like businesses. So they have weekly reports, monthly reports, quarterly reports, yearly reports. So it's a constant cycle. It's over and over and over and over and over again. So all of these news releases will be there. And if you want to be able to capitalize on the moves that are big and massive, like what we saw last week, Friday, okay, or I think it was Wednesday, and Wednesday as well, we traded the USD CAD, you have to focus around the times when it must move, and of course, the news events. You don't want to look a small movement. That's a waste of your time. You stick in front of a computer, you're waiting for something to move in your direction. You fall asleep, you get frustrated, you enter a trade, you exit the trade. No, don't waste your time. It's not benefiting you. Pinpoint the days that you want to focus on. Pinpoint the time of days that you want to focus on. Trade around the news events and use a momentum to your advantage. Again, I said July 19th, July 19th, July 19th, July 16th, right here. All right. And the time of day for this one is the same thing, 8:30 a.m. So we have 6, 7, 8, 9, 10, 11. Now, this particular trade, as you can see right here, kind of give you what we consider like a whipsaw. But let me just put it to really move that much or should I say on a day-to-day basis. The movement right here was fantastic. One piece of movement. This is good movement. You just want to get in, get out, grab what you can get out and leave. All right. There's different areas that you probably could have taken profits at. Again, we focus on areas where there was reactions from. Here's an area where a complete reaction from. Price went down, came right back up into that, pin down, and went down. Okay. All of this right here. Up until this point right here, where it says 00, this is when London session starts. Candles here versus the size of the candles over here. This is what you want, ladies and gentlemen. And this is the Australian dollar. This is something that moves very, very small. If I looked at the GBP USD, a USD CAD, a Euro USD, okay? I don't really trade gold, but of course, it has bigger movements. You would definitely see a lot larger movements on this particular day, okay? Let's go to now to June the 14th. So we just did July. This was July 19th, the right date? This is 18th, 19th. No, I did look at the right date. Yeah, this is right. So next date is June 14th. June 14th, 14th of June, 14th of June, June 14th, 21st, 18th, 16th, 15th, 14th up here. Well done. June 14th is, no, this is, no, sorry, this is 13. So the 14th will start from here. Yeah, June 14th is here. So this is episode 6, 7, 8, usually it's right here, 9, 10, 11, you'd stop here. This entire move is all that you would need. So one quick tip, for example, since we're looking at the AUD USD here, here's a tip for you. As this currency pair starts to move into the London session, when you know that the GBP, the euros, and things like that would move a lot more, you start to take some profits around this time. Bring a stop to break even. I don't care even if it concerns you. The fact that it's going into London means that you know that you're not going to have that much movement. Okay, so you take what you can get right here. This is AUD USD. You're not going to hold on to this trade for the rest of the day because you know you're going to enter London, which is going to be kind of choppy. You know, eventually you're going to enter New York, where there's going to be an opportunity. So if you notice this big push in New York, that's due to the USD aspect of it. Okay, that's the only reason why this was here. Yes, you may look at this exception. This is an exception, people. This hardly ever happens. All right. So here is where you take your trade. Could have taken profits here. Could have taken profits down here. You don't need anything more than this. So within anywhere close to, let's take a look at this. Again, this is AUD USD, something that doesn't move a lot. What's overall pips for that move? That's a 20 pip move. So with a one lot trade, that's $200 in a span of, so 6, 7, 8, so 1, 2, 3, in 3 hours, that's $200. If it's 0.1, that's $20. If it's 0.0, if it's 0.001, then you're looking at roughly $2, okay? But using the mass movements right here. Now let's focus on another news event. Let's look at something else. Let's look at last week. Let's see what we had last week, because we had a lot of good news that came out last week. And let's just observe what the markets did. I'll increase my filter. I'm just going to put everybody else back on. And let's take a look at what happened last week. So we had, okay, so this was last week. This was the 15th. Ooh la la. Let's still look at the AUD. All right. So this was last week. This was 8:30, the 15th. Click on the little folder right there. You can see the respective dates where we can go back and view. So August 18th. Let's take a look at August 18th, ladies and gents. August 18th. Let's see what we have. August 18th. 18th of August. At the exact same time when the news came out. Right here. So 6, 7, 8. Right here, the news came out right here on this little can right here. From there to down there is roughly about 17 pips. Quick movement. Very, very quick movement. Even as you see price coming back up here, bring stops to break even, take some money off the table, price still definitely rallies up for a massive, what's this? 32 pips. You'd have stopped trading roughly right here. This is where London would have opened, right here, right here. You don't need to be trading AUD USD after this point, right here. Clear at the bottom here. But of course, as price was moving in your direction again, you should have been able to jump on here and catch something, okay? Let's take a look at something that moves a little bit more than AUD USD. Let's look at the CAD. Let's look at the CAD. Same day, September. Let's look at the CAD. The CAD was August 18th. I'm gonna go to the CAD. USD CAD, August 18th. August 18th. Oops, right there. August 18th. Right here. Yep, August 18th is right there. And the time of day for that would have been 7:30 our time, of course. So bum. So news release would have come out right under this big red candle right here. This one right here. Let me draw a vertical line for it so you can see a little better. This one right there. Okay. Now notice something. At the end of this candle, price pushes down river. Not really by much. Comes back up, pins low at this reactionary area right here. Creates a reaction from that, and then bursts completely higher. Let's take a look at that pip movement right there. That is 46 pips. With a 1 lot trade, that's $406. 0.1 lot trade, that's 40 something dollars. 0.001, that's $4.60 something cents. You don't even need for this pullback in price. I'm not even talking about what happened the next day. That don't really matter. This is enough movement. Even if you got into a trade here, made a little movement here, and you start seeing price push against you here, you should have caught something on this. This is a big movement. This is what, look at the size of the candles. 1, 2, 3, 4. This is 4 hours. Beautiful, beautiful at this level here, which was a previous area of reaction. All right. So there's money there. 20th of July. 20th of July. 28th of July. 28th of July would be this, no, this date. Yeah, this date right here. This would have dropped right here on this red candle, right there. Right there. Okay. Right there. Right here. Initially, you had this huge push up, which is at least 38 pips. 1 lot, that's $380. Price does eventually push back down in the opposite direction of at least 47 pips. I'm not even talking about this big move right here, because you could have made money here, you could have made money here. As price was pushing back up here, you could have gotten in here and made something here. As price was during this time of day, the US dollar must move, the Canadian dollar must move, and we also have the coupling of the news events that's going to push price. Okay, so this was a massive, massive day that a lot of money could have been made. Your goal is not to catch every single move, by the way. Your goal is to just collect something for the day, shut your computer down, shut your phone down, walk away as a victor. Go do something else. You have tons of other responsibilities. You get out. Okay. These days, a lot of advantage could have been taken as well. Last one for this one we're going to look at is going to be June 16th. This is June 16th. And notice how the news releases occur exactly except for the times that these pairs are supposed to move. June, I would say 16th, June 16th, 17th, right there, June 16th, right here. This is June 16th right there, isn't it, man? June 16th. So as you can see, on some days, the moves are a bit bigger than some, and that's completely fine. Your job is just to grab something and get out. Grab something and get out. News releases would have happened exactly right here on this candle. This little candle right here, this one right here, okay? Price doesn't do much movement right here, comes up, nothing much right there, completely shoots down, okay? So let's just say you caught this move, just this little move down here. This is what you're looking at least 35 pips. 1 lot trade, that's $350. I'm not even talking about this move that came right after. Let me just verify what happened else on that day. What else happened on that day? What else happened on that day? No, this is that. This is 8:15. All right, I don't see any news events for the rest of the day. So this looks like this was just purely bank manipulation. The point is, around this particular time of day, what is supposed to trade very, very much? The US dollar and the Canadian dollar, okay? So even if you didn't make any money on this, as price was turning in the opposite direction, you should have been able to catch something, ladies and gentlemen, something. Look at this move. It's massive, 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 massive. You're supposed to at least catch something, all right? So guys, again, kind of just drilling it into your head that you kind of want to pinpoint the days that you want to trade. You don't want to be in trades that are not going to move. You don't want to be focusing on times a day when things are not going to move. It's going to make a lot of frustration for you. You're going to beat yourself up. You're going to feel like you don't know what you're going to do. You're going to be in and out of trades, and you're going to lose a lot of money. So instead of trying to trade every single day, pinpoint the days the news are coming out. Focus on the pairs that are going to move at the specific times of the day that they must move. They have no choice. They must move, and take trades accordingly. And again, do not fear being wrong, ladies and gentlemen. When you're wrong about a trade, it's supposed to teach you something. All right, let's just say that you took a trade somewhere in here. Now let's just do a trade premise, okay? Let's just do like some sort of trade premise. So let's just assume we didn't see anything that was happening over there. And let's just wait until the time. So this is what, 5 o'clock, 6 o'clock, 7 o'clock right there. So I know that we saw everything else that happened right there, okay? And I'll be honest with you. If I was taking this trade, just based on this, I would have sold. No joke. I would have sold and my stop loss would have been up here. Reason being, I saw price break through this particular level right here. Went up, came back down below it, came back up into it, and was pushing down. I would have sold here. My stop loss would have been up here. And of course, I'd be looking to take my money somewhere here or somewhere down here. Why? Because at this point here, I had some sort of reaction from these levels. Okay, and if it broke through this level, then of course I'd be taking my money here at this level. Okay, all right. So once it hit here, I'd have probably gotten out. Okay, so I'm going to be honest with you, I probably wouldn't have caught this, but that's not necessary for me. This is fine for me. I don't need no more than this. A one lot trade is $300. I mean, do the math in Jamaica, and that's what, on 45 grand, 46 grand. You know, I mean, let's be honest. Okay, I think it's a little bit more than 45 grand, but yeah, you didn't need to catch this. It'd be nice, of course, if you caught this. This is fantastic. You'd be able to brag about it, but it's not necessary. All right. So that would have been fine. Let's focus on, let's try the same thing with a currency pair that we know must move. Let's try with GBP USD. Let's take a look at some news that came up for GBP USD. On this particular date, no, there's nothing too much in terms of US dollar. Oh, no, sorry. Let's go back. GBP right here. Okay, same date, the 15th of September. 15th of September. Same day, GBP, 15th of September. Right here. And the time that we're going to focus on is 1 a.m. So bam, right here. Right here, so right there. That's when the news that have come out for the GBP USD on the 15th. Right there. This trade right here. Let's take a look at the amount of movement that we got on this one trade. I'm not even holding, notice I'm not even holding for the top here. I'm just holding for like maybe an hour, maybe two. That's 35 pips. Again, one lot, that's $350. Okay. Trade premise for this. Let's just see what we would have seen before that. Let's just say we didn't see anything here. This is what we saw. All right. Right before the news event. Price came down, bounced down, pushed below this particular level. What does it do? Does it come up to it and then does it push down? No. It goes down to it, breaks out above it again. Okay. So it didn't give us that break and retest. So it didn't break it in terms of a floor here. It didn't come back up to it and it didn't sell again. It didn't do that. It stopped here, began to push. So it pushed above the area right here that it broke out of. So remember, this was a reactionary area. It pushed down, came back up, and it's shooting up. As soon as you hit the news event, what does the news event do? News event comes all the way down, pins it exactly at that spot or that area, and then shoots up away from it. You enter there, your stop loss below here. Your take profit is either going to be this level, because of course it's a previous area that you had some sort of reaction from. This level, area you had a reaction from, or this level, area you had a reaction from. Price pushes directly up into this level and that level. And of course we had that reaction. And when we had that reaction, where did this reaction take us back down into? Took us back down into this level, the level we just broke off above here. All right, so it's blending a couple things that we've been through. Time of day, time of week, news events, volatility, and of course the fact that if something breaks something in terms of an area that there was a reaction from, expected to come back down to that area to find some sort of support or floor and then push higher. All right, and just as so it broke out of this area while coming down, it went back up there, had a reaction. So even if you took sales from here, you'd have made some money on this, but of course not necessary. You'd have made your cash on this. The news event happened exactly right here, right at London Open, and you just took advantage of that floodgate. And that's all you needed. Lucky computer, got your bed, and that's it. All right. Any questions, guys? Any questions at this time in regards to what we just spoke about? Anything that's not clear? You want me to run over again? Any concerns?
Hello?
Yeah, go ahead.
Good night. Anderson here.
Yeah,
All
Andy.
right. So while you were going through the first and foremost, I must say thanks for the information you sent us. I spent quite a few hours going through it, going over it, and I can say that it has been some good information. Now, while we're just going through, especially GU, I was actually picturing the information that you sent us. And right here on the screen, on the 14 going over to the 15, I can see that I can see see what they were saying. If you understand what I mean. Right between 12 o'clock there, before the London session started, you
They're
can
right
see
here.
where right the other session. No, over under where you have the black mark.
Yeah.
Yes. So that would be 15, 1500. That means going over to where the let me see. Go over some more. Where you have the engulfment.
Right here.
The engulfment. Go down. Yeah, right there. You
Yeah.
can see that right there is where the London session basically took over based on my understanding. And
Would have been here.
the Asian session.
London
Right.
started here. London
So you
started
can
exactly here.
right. So you can see where the consolidation from the Aussie session was
Yeah.
coming into the London session, and then it picks up, it dips.
Yeah.
And when it dips, it picks up and then shoot up.
Yeah.
Not only shoot up, but when it shoot up and reach to that major point at the top,
Mm-hmm.
just as it was said in on ICT, it's going to draw back for the New York session and then it's going to pick up again. And that's exactly what took place right there.
That's exactly what took place. It's beautiful. I'm glad that you actually picked that up. I'm glad that you actually picked that up, man. Yeah, man. So you went through the video and you studied it and you see the application right here. So not trying to confuse anymore, but whoever, for those who actually watched the video, it's called the power of three. So there's what is known as three different phases in the market: accumulation, manipulation, and distribution. All right. So in this particular area where you realize it wasn't really moving a lot in terms of its bouncing around, bouncing around, bouncing around, what happens in this portion of the day, and of course, because it's GBP USD, this is the Asian session, and we spoke about what moves very heavily during this time: Australian dollar, New Zealand dollar, the Japanese yen. You're not expecting the GBP or the USD to move heavily during this time. Now, what the banks will do is that during the times before they officially open for the respective pairs, they will accumulate orders. So buy orders, sell orders. Persons who want to buy, persons who want to sell. So they accumulate orders right here first. As soon as the floodgates open, whichever one of these sides has the majority of the orders, that is where you see price will be pushed. And you don't really need to, you can't really figure out who has more orders. So, before anyone asks that question, you can't really know, okay? The banks will move the price, all right? What you need to focus on is the fact that as soon as it is London open, when the banks are officially open in London, expect the volatility, expect the floodgate kind of thing. Okay, so let's just say even if you had gotten into a buy here and you had set a tight stop loss and this candle came down and stopped you out and you started seeing going back in your direction, all you need to do was just jump back in and expect price to move you. That's all you would need to do. Okay, as it approach into New York session, as Andy mentioned right here. Oh shoot, time almost finished. As we approach back into New York session, why we're focusing on New York session? Because it has USD. USD, what moves in New York session? USD and the Canadian dollar. As we come back into the New York session, look at the times, 8 o'clock, we would have gotten up right here. We would have gotten up at 7 o'clock right here. Usually anywhere between this area, there would have been a news event. I don't think there was that day. Yes, there was. Not anything really heavy, to be honest with you, for this news event, but you see the time. CAD came out at that time, USD came out at that time as well. All right, 7:30. So it had some sort of news event right here. But for this particular one, I don't think it really would have any major impact. But yeah, well, it did. It did. I think, Mr. Brown, I mentioned this to you, and oh, I forgot. I didn't give you guys the information. Okay, so if you don't have a red news day, how can you determine if another kind of news will have the same kind of impact? All right. So for the news, there's three different sections for the news. You have the actual, which is when the news actually gets released, that's the data that comes out. So if there's a news coming out today, whatever comes out today, that would fall on the actual. You have forecasted. On your MyFX book, I think it says consensus, but it's the same thing. Forecasted and consensus. Consensus. And then you had the previous. Okay. Now, if you don't have a red news day, like when I say red news, I mean these, and you have like an orange day or a yellow day, and you want to know if the markets will really, really move, if the actual differs from the forecast by a huge deviation. What do I mean by a huge deviation? On this particular news event right here, the forecasted was what, 8.1. The actual was 34.3. That's a huge deviation. Notice what we have here. You have the forecasted being 8.1 and the previous being 8.3. This is not a huge deviation. But when we're focusing on these kind of news events that we want to see if they'll move a lot, if they're not a red news event, forget about the previous. Only focus on the forecasted, or it may say consensus, the forecasted and the actual. If they deviate from each other greatly, and when I say great deviation, let me show another example of a great deviation. This is another great deviation, 3.2 to 2.9. 14 points, even though this is a red news day, but 14.6, 146.3K to 78.5K. That's a massive deviation. Whenever you see huge deviations from the actual and the forecasted, just be aware that the markets are going to move heavily in one direction. Give me a sec. Sorry about that. All right. So that's something that you can write down for yourself and you can run through them. All right. So whenever you see any other news event that's not a red day, like an orange day or even a green day, which is supposed to be a low impact, once the news comes out and you see a huge disparity between the actual and the forecasted, it will have an impact on the markets. All right. But anyways, news came out right here during New York session. It pinned down and then just shot all the way back up. Okay. But very, very good observation, Andy. I'm glad that you actually watched the video. And of course, guys, we can run through more of that at another time. But keep watching it. It's really good information. All right. It may seem like a lot. You may hear a lot of terms that you don't really recognize. That's not a problem. All right. Just focus on the principle, the fact that you have specific times of day when specific things must move. Then if you have the news events, which will happen at those specific times of day, you have that extra push. You have the extra momentum to move price. And that's all we need. We just want movement. Okay. You're not going to have big days like this all the time. You're going to have a lot of them, but you're not going to have massive days like this all the time. But remember, all you need is just a push. With a proper risk reward ratio, a 1 to 3, a 1 to 4, a 1 to 5, you can make good returns on your capital. Okay. You can cover losses that you took the previous day or previous before. All right. And you just make what you need to make for the day. Okay. But the most important thing is if it is that you're trying to trade certain pairs, soon forward, Andy. If it is that you're trying to trade certain pairs around times when they're not going to move, I promise you, you're going to be frustrated. The markets will be just bouncing around, bouncing around, bouncing around. You're going to enter trades, you're going to exit trades, and you're going to be losing money. Each time you place a trade, ladies and gents, there are charges and fees associated with that. You have to be careful. You can't use your emotions to place a trade. You can't see something moving and just want to jump into a trade. You must have a premise. You must have some sort of structure or reason behind the trade. Again, reasoning simple. If I'm trading the GBP must move during London session. Okay, fine. I know GBP is going to move during London session. What else can I use to help push price whether up or down. Use the news events. You don't care what the news events is going to say. You don't care what the results are going to be. You just want that additional movement, whether up or down. Thirdly, do not be afraid to take a loss. Do not. You're not expected. This is not. You're not expected to be perfect in this. You cannot be perfect in this. You cannot win every single trade. You will never win every single trade. You will not even win 90% of your trades. You're probably not even going to win 60% of your trades. All right. A good trader averages anywhere around like 50 to 45. And exceptional traders may get up in like the high 60s. But don't expect 70, 80% hit rates. Expect to take losses. But your loss should teach you something. Your loss should either teach you that it's not the right time, okay? It's not the right direction. Your stop loss is too tight. All right. It's supposed to tell you something. Use that information from a loss. If you feel it's comfortable, if you feel like the market conditions are still prime, you can jump back in again, but you must have a premise. So if you're going to take trades during times like this, for example, GBP, when it's not moving at all, and you enter here and you see come back up and you exit again and you want to jump back in again, that's just bad trading. That's bad management. You must have a premise. When the news released at the opening here, we had a big push. So even if you saw that this candle right, this green candle right here, and for some reason when it closed, you thought that it was pushing against up here, so you're going to sell. As soon as price start breaking in this direction, you exit that trade and jump in the next direction. You must make back your loss here and make back quite some. All right. So that's the principle there. Andy, what's your question from?
Yeah, I wanted to ask, what if you wait until after like the news to actually enter the trade? Is there a problem with that?
No, there's no problem with that at all. All right. There's certain news events that will move without you. Example, NFP, which is very, very rare. NFP only happens like once a month. And let me show you NFP. NFP, ladies and gentlemen, is the biggest news event every single month, but it only happens once a month. So let's go back to the 3rd of September. NFP, this one right here. Non-farm payrolls. Notice the actual value, notice the forecasted value, notice the disparity between the two. Yeah, every single month, this one news event. So it's going to be the first Friday of every month. This is the only news release where I would caution persons to stay away from because I'm telling you, it will move in like 2 seconds. It will move in 2 seconds and it's going to move very, 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 very fast. So let's just go to I can look at any pair.
Following, leaving anything?
Hmm?
Oh, sorry.
Yeah, man. So NFP right here. This is probably gonna close very, very shortly, guys. So the next one that we jump on, we're probably only gonna be on for maybe like a 10 minutes or so, because I think it's almost 10 o'clock now. But this particular news event, just wait, just a couple seconds. It don't make any sense I even pull up the chart. But so we're looking at the 3rd of September, 3rd of September, 3rd of September, right here. This is big movement right here. That's NFP. I'm going to show you hold on, this is almost done. The next date is the 6th of August, 6th of August. See if I can catch it before this time's out. 6th of August, 6th of August, 6th of August.